Welcome to the UK Investor Magazine podcast, the latest on shares, markets and investments, now available on your Amazon Alexa.
Hello and welcome to the UK Investor Magazine podcast, now also available on the UK Investor Magazine mobile app. For today's podcast, we're going to be taking a look at Tekcapital. We're going to be looking at a number of interesting updates from the company. We're going to be looking at the proposed Guident IPO. We're also going to be delving into the half-year report that was released this week. And to do that, we're very kindly joined today once more by Dr Clifford Gross, who is the chairman and CEO of Tekcapital. Very much welcome you back to the podcast, Cliff.
Well, it's very kind of you to have me. Glad to be here.
So as I said, there's been an awful lot happening, and we're going to be delving into some of the questions that I'm sure investors have around Tekcapital at this point in time. But I think a good place to start would be, of course, is for those listeners that aren't aware of Tekcapital. Please could you give us an introduction, first of all, to Tekcapital, Cliff, but also yourself, please?
Tekcapital is an incubator of technology companies, and we're focused on bringing university discoveries to market that could improve the quality of life of the people that they serve and also produce, hopefully, a strong return on invested capital. That's sort of our dual mandate.
Fantastic, thank you. And looking at that return on invested capital, that's been underscored this week in the half-year report. So I think a good place to start the conversation today, Cliff, would be to run through those numbers, if we may, and look at where those returns came from.
Sure. Well, the headline number is that we had a record net assets at the end of the first half of 2025. Our net assets were $77.4 million US dollars, up from $70.1 million in December. And by the way, in December, our net assets were up by a very considerable sum, 46% over the prior year. So it's 10% over a 46% increase in the prior year. And just in terms of perspective, Tekcapital went public in 2014 on the AIM, and at that point in time, our net assets were approximately $1.7 million. So there has been a very meaningful increase in our net assets. And of course, it's all due to the increase in the value of our portfolio companies. Our NAV per share stood at the end of the first half at 33 cents, which is about 24p. And that's so right now, our NAV per share is 24p. Our market cap is around 10p a share. And that's before the IPO, the forthcoming potential IPO of Guident. So I would say this is an amazingly fortuitous entry point for anyone interested in potentially participating in the Tekcapital story. Continuing on just a tad bit further, our portfolio valuation, which is primarily the 5 companies in our portfolio, was $68.8 million at the end of the first half, up from $61.5 million of the prior year. Our revenue was $6.1 million, about 5.5 of that was from portfolio valuation increases and mark to market, and the rest was from revenue from some services we provide to our portfolio companies and interest income on convertible loan notes that we hold. Our operating expenses, and this is really interesting and helpful, we have a chokehold on our operating expenses, and our operating expenses for the first half of the year were a total of $700,000 versus $1.5 million for the prior year. And we think that's a remarkable number to be able to operate a business that has created $77 million in net assets and operate that business for $700,000 for a 6-month period. No one else on the AIM or anywhere else that's publicly listed can operate a company at that price point with the type of asset creation that we've done. And that was a 52% reduction in our cost basis. And our profit after tax was $5.4 million US dollars for the 6-month period versus $19.5 million because of the prior year, because of the very large increase in net assets, 46% of the prior year. So it's It's a solid, without any overstatement, it's truly a solid report. Record net assets and record low operating costs at the same time. And our portfolio is making progress.
As you mentioned there, very strong increases in the value of the portfolio, of which of the 5 companies that you have within the portfolio, Cliff, as you mentioned, 4 are currently publicly listed, and that's been reflected in the increase in the portfolio valuation. When we're looking at the 5th one, and this is a topic I know that investors are going to be particularly interested in, Guident, you've made a release very recently in terms of the S1 being filed now publicly. So any investors who want to know a little bit more about Guident, you can look on the SEC website and get some more information there. But for investors, Cliff, that aren't aware of Guident, please would you be able to run through their business model, what they're doing on the ground, and their plans for a NASDAQ IPO, please?
Sure. So the USP is essentially this. Autonomous vehicles are rapidly expanding now around the world and are coming into their own, primarily because the underlying technologies that make it possible, which are the NVIDIA chipsets, which all autonomous vehicles have, and the large language models, whether they're from OpenAI or other providers or developed in-house, those two technologies combined made autonomous vehicles possible. In other words, made it possible and economical for vehicles to make decisions on the fly regarding their navigation. So although it was a dream to have autonomous vehicles for at least the last decade, in the last 24 months, they're actually possible because the technology caught up to the dream. And case in point, if you look at Waymo, which is a subsidiary of Google, Alphabet, they're providing upwards of actually more than 1 million paid autonomous taxi rides each month. And so they're projecting to achieve roughly 12 million paid autonomous taxi rides this year alone. And that's just in a handful of cities. And they're also intending to expand to many more cities this year and then around the world. So you could see this is not just a future kind of thing. This is a today thing. Autonomous vehicles are operating around the world today, and there are going to be millions and millions of them in the very near future. And if you want to look at an analogy, air traffic control is, I think, a really interesting analogy for guidance monitoring of ground-based terrestrial autonomous vehicles. In the United States, approximately 45,000 commercial flights occur each day, which are monitored by air traffic control. That's roughly 16 million flights a year are monitored by the FAA. But the number of ground-based, you call them flights or trips, that people will take in vehicles over the next few years could easily be more than 1 trillion per year, because there are many more people that take trips on the ground than take flights on a given day. And our USP and the investment thesis for Guident is simply this. All of those trips will need to be monitored. Why? Because no matter how good the technology is, and it's really good now, it's best it's ever been, and the sensors are fantastic too, the LiDAR sensors and the camera sensors and the ultrasonic sensors and the thermal imaging sensors, they're all good, very good. But there will still be mishaps, there will still be mistakes, there will still be errors, and there will still be accidents. And those vehicles will not have drivers in them, and they'll need to have a system, an eye in the sky, as it will, to help resolve those disengagements from the system. And even if there's not an accident, but the software cannot determine what to do next for a wide variety of reasons. They could be weather related, it could be sensor related, it could be power related, it could be network related, it could be related to other reasons. So no matter how good the software will be in the future, there will still be disengagements. And in our view, you'll still need to have a remote monitoring system to help ensure safety for the occupants and for the people outside of the vehicle that could become, in harm's way unintentionally. So as a result, over the next couple of years, we think more than 1 trillion trips will be monitored each year, and Guident's business model is to hopefully win a portion of those. Now, some of those trips will be monitored by the vehicle manufacturers who will decide to build their own remote monitoring systems of one form or another. That's to be expected. But there'll be tens of thousands, if not more, fleet operators of autonomous vehicles of all stripes, whether they're delivering bipeds or heroes, subway sandwiches. They're going to need to be monitored. And some of them are not going to be delivering anything, but they're just going to be monitoring workplaces for safety reasons. And those robots will need to be monitored. And then some robots will be performing other activities, and they will need to be monitored, because a robot unmonitored, can become a weapon, intentionally or unintentionally. So all of these autonomous vehicles and robots will need to be monitored. It's an entirely new industry. It's never existed before. It never needed to exist before, because there weren't autonomous vehicles and autonomous robots. But that is changing right now, and it's changing in a big way. And it's one of the most fastest growing new technology applications of the combination of large language models and NVIDIA chipsets in the world. So it's very exciting. And that's the space that Guident plays in. They filed their S1, as previously publicly reported, on the 18th of September. Once the S1 is cleared by the SEC and allowing for the proper market timing, the roadshow will be scheduled. And the company's goal, Guident's goal, is to complete the roadshow and the offering as soon as practicable, markets and regulators allowing. We hope, we don't know exactly when that will occur, and neither do they, to our knowledge, but we hope it will occur prior to the end of this year, as mentioned earlier this year by Tekcapital. That was our target.
Thank you very much, Cliff. So, on the successful IPO of Guident, that will be 5 out of 5 portfolio companies that are publicly listed, which is no mean feat, given that around 90% of startups fail within the first 10 years of existence. So having 5 out of 5 that are publicly listed is certainly something that should be commended. But it does then pose a question for Tekcapital in terms of being a technology incubator, as you were some years ago, to now moving into a position where you have 5 publicly listed portfolio companies. So the management of those individual companies is going to be very different. Your approach to managing the portfolio is going to be very different. So what's the plan after the Guident IPO?
We want to continue to invest in portfolio companies that have compelling IP, primarily in the space where they utilize generative AI, because we think that's the most disruptive technology in the world right now. But this may include investments in current portfolio companies as well as new ones. So we're going to continue doing what we've been doing, but we're doing it, in a slightly more refined way. We're focusing technologically on generative AI, large language model applications, because they have so much potential energy. And we're also looking at multiple companies right now that we're tracking, where large language models can dramatically improve the margins of operating those businesses. Similar to what happened when the internet was introduced, the internet's great promise of democratizing both communication and knowledge was that basically any company that really knew how to utilize the internet to good effect could improve its reach, could improve its margins, and strengthen its business. And so we think it's a similar thing now. It's somewhat analogous to the generative AI age that we find ourselves in, that companies that can embrace generative AI, both internally in terms of streamlining their processes and externally in terms of outreach, could have a competitive advantage over their brethren in their space, And so we'd like to help companies do that. And we think we're in a good position to do that because we've become somewhat knowledgeable about the application of generative AI to a wide variety of businesses, traditional businesses in some cases, like the eyewear business, but other businesses as well.
So, Cliff, when we talk about portfolio companies in the broader context, if you're looking at funds, for example, they'll be holding small stakes in companies, sometimes larger stakes. But one of the things about Tekcapital is each of the 5 portfolio companies at the moment are companies that you have founded yourself as a company, provided growth capital, and then taken through to IPO, and of course had quite a strong level of influence and control over that process. What does it look like going forward? Are you going to be seeking out companies that you can take a large stake in and have control over? Or are you going to be looking for a more diversified approach and maybe taking minority stakes in companies?
Well, I think in earnest, we are opportunistic. And to us, quality is always more important than quantity. So if we see a good business that could be dramatically improved with generative AI, it'll get onto our radar, we'll analyze it, and then depending upon the existing value, we could determine what percent of an interest would be appropriate for us to consider acquiring, and then fusing into that business generative AI technology. And of course, this would be done working with the management, hand in glove, not externally. So it's a more precise way of creating marketplace value from new discoveries focused on Gen AI, using existing successful, albeit small, enterprises. So I think it's an improvement over our model. It'll have less risk. We won't have to support those companies for their basic operations for a number of years until they get going. And it'll have a more immediate potential impact, positive impact, on their margins, which will mean, other things being equal, that our investment should appreciate if we're able to successfully integrate a large language model's capabilities into a traditional business.
Thank you. Exciting stuff, and certainly looking forward to hearing more and seeing further developments in the AI side of the portfolio, Cliff. But to finish off now, this is a question that I have, and I'm sure it's a question that lots of investors will have as well. It's a question about guidance. When you're looking at the IPO, do you have any indication of the potential valuation on listing? I know this isn't a question that you may be able to answer, but I know it's a question that a lot of investors will want to ask. So I'm going to ask it to you. How do you see the valuation playing out on the listing?
Well, the short answer is no. We don't know what the value is going to be, and I don't think they do either. We don't know because the roadshow has not begun, and we won't know until not only has the roadshow begun, but it has been completed, and the bankers rationalize the supply and demand and determine the pricing, the pre-money valuation. So that's when we'll all know. And when they do that, they will file a document with the SEC, and 2 days later the company will list. So that whole process is in front of us. So we don't know what the valuation is going to be. I can tell you historically what the valuation is. You can read it right on Tech's balance sheet of our H1 report, which was published yesterday. And that is of H1 2025. Guident was currently on Tech's balance sheet for $23 million. And we think that's low. I mean, a data point for that, if you read into the S1, this is all publicly available, Guident had valued its intellectual property portfolio, not its business, just the IP, and with a major IP valuation firm, and that came back at around $32 million, just the IP. So we think Guident, is a very valuable company. How much it's worth, the market will tell us after they do the roadshow. One other point I'll just make, without being too frothy about it, we are genuinely seeing a lot of interest from investment bankers and brokers who want to participate in the IPO. I guess the best way to close it out is we are really excited about it, and hopefully it will go well, and when it's completed, we will make an announcement and update the market.
Indeed. And at that point, Cliff, I'm sure we'll have you back on to discuss that IPO in more detail. And then, of course, at that point, look at Tekcapital's plans for the future. Cliff, thank you very much for being on the podcast today.
No, it's my distinct pleasure, Jonathan. Thank you for your continued interest. Have a lovely evening.
Thank you very much. And thank you very much to everyone for listening. Thank you.
We hope you enjoyed listening to the UK Investor Magazine podcast. Please do share the podcast, and we really value any reviews and comments you leave us in your chosen podcast player. The views presented by the hosts and guests of the UK Investor Magazine podcast are in no way investment advice, and please remember all investment involves risk.